Wow, quite a crowd. I realize everybody's getting free pizza, and I know how much that meant to me going in, but I was telling the group at lunch, I said, class of 97, back then the Distinguished Speaker Series actually meant something. We had really good, strong speakers, and you guys now have to settle for me. I was talking on the way over here, reminiscing about some of the things and some of the professors I still keep in touch with, and Dean Johnson was telling me that some of you guys first years have just completed the speaker series where you had to do 5 minutes of stand-up. How many of you guys have done that? Trust me, I've been in the workforce for 15 years now. I've spoken in front of groups of as many as 2,300 people in a studio-type environment. There is no harder presentation I've ever had to do than 5 minutes of stand-up in front of your peers. So those of you who have finished it, congratulations. It's all up downhill from here. Those of you who have still had to come, that's not so bad. But anyway, thank you for that introduction. I am a bit notorious here. From the first days at Owen, I wanted to work for an airline, and it is true. Peter did try to talk me out of it. It is probably true. I don't know what his compensation package was, but I absolutely dragged down the average. I was telling the group at lunch today, there's 2 people that were published, not people, but 2 salaries that were published in the 1997 placement guide. And just so you don't go look it up, mine was $40,632 out of a top 25 business school. But I like to say I graduated first in my class and getting exactly what I wanted and what I was looking for out of an Owen degree. My history, I wanted to be a pilot since I was 8 years old. For a lot of reasons that couldn't happen. I was in ROTC in undergrad, but was disqualified because I had asthma when I was a child. Couldn't afford to train privately and go the instructor's route. So ultimately said, I can't be a pilot, but I like airplanes, I like money. There's got to be something you can do to do the two together. So going to business school, corporate finance has always been fascinating to me. I love it, and I love the airline industry. And those of you who have studied it, are studying it, or will be studying it or working in it, it is probably one of, if not the most intellectually stimulating environment you could ever imagine being in. In the early days, the volatility of the airline industry was such that you could spend 3 weeks working on a project, and by the time you get ready to present it that morning, all your assumptions have changed, and it's no longer something worth doing. You've got to be able to be quick, nimble, dynamic, and a lot of the things that we see right now, we actually talk inside of Delta about our transformation into a real company. This is not the airline industry that you're used to reading about in textbooks. It's not the airline industry that is characterized by serial bankruptcies. We've gone through that phase. It was inevitable based on the way the industry behaved. But at the same time, we've now emerged. We've consolidated, and things are looking brighter than ever, such that in my 15 years of being in this industry, despite our stock price run-up, despite all of the improvements that you'll see in these slides above, I remain more optimistic today about the future of Delta than at any time I've been with the company. So I want to spend a little bit of time talking about what's going on in the industry, where we are, how Delta's positioned in it, and then hopefully we'll save some time for some questions afterwards, after you guys have finished your pizza. The airline industry that you guys all know and love, and we love to make fun of, Warren Buffett. How many of you guys know Warren Buffett's famous quote, fastest way to become a millionaire is to invest $1 billion in an airline? It's true. We have to own it, because that is part of who we are. That is part of where we've come from. But if you go back and look at where the airline industry was to where it is fundamentally transforming into something very, very different. And it's very exciting to be a part of that. 2002, just 10 years ago, the airline industry had just come out of 9/11. hopefully the worst disaster in the U.S. in our lifetimes, really had an impact on the industry as a whole. Going into 9/11, Delta had an investment-grade balance sheet. We were rich with cash. We had a lot of assets that we were able to go borrow against. Part of how I was able to move up in my career was I was the enabler for Delta's spending culture. I brought in lots and lots and lots of debt. I always said, as a treasurer, if any of you guys aspire to be a treasurer, you should never stay in the position long enough to have to pay back the debt you borrowed. I fulfilled that only on a technicality. So, we borrowed a lot of money, and we had to. The industry in 2002 was characterized by 9 major airlines, none of whom had more than about a 16-17% market share. And everybody battled on market share. It was all about who could have the biggest airline, who could fly the most passengers, not who could be the most profitable, not who could have a sustainable business model. And as a result, the industry had $10 billion of losses, leverage ratios that were through the roof. That led to the restructuring cycle of 2003 through 2007, still continues a little bit with American today. But what's come out the other side of it is a recipe for a much more stable industry. A lot of people are equating it to the renaissance that the railroads achieved through consolidation, where there was a lot more retrenchment, focus on return on capital. And now what you see is you've got 5 major airlines in the industry together, and let's see, who knows if that's going to go to 4. There's, the pending American-US Airways merger. But those 5 airlines, soon to be 4, control 90% of the U.S. market. And as a result of that, we've been able to amass scale to the point that we've created stability. So the revenue pile is much, much bigger. Net income, marginally bigger, but that's mainly because fuel prices are so much. Fuel prices are probably 8 times more expensive today than they were back then when you look at on a per gallon basis, but significantly less leverage. And as a result, we're at this place where we can be more stable. And this is where Delta's emerged. We're the first ones out of the block in this material consolidation game. Yeah, US Airways, America West merged a while back, but it wasn't nearly the magnitude of what's created now. And this has been our run since that merger. And you look at the type of health, whether it's operating margin improving to almost respectable levels, pre-tax margin going from a loss to a profit, and we've paid down, that will, by the end of 2013, say $10 billion of debt, which is a goal that we set aside in 2009. We paid down over $7 billion of debt in just 4 years as a result of our disciplined approach on cash flow and our focus on operations. It wasn't easy. After our merger in 2010, we bit off more than we could chew. Our summer of 2010 was probably among some of the worst operating statistics on record. We put airplanes into markets that historically hadn't flown there before because we took these combined fleets from Delta and Northwest. We didn't have that expertise. We didn't have the parts. We didn't have the system. If you're going to compete in a consolidated business like the airline industry, you've got to find a way to differentiate yourself. That's the only way you're going to get serial outsized returns, is if you can provide some value to the customer that others aren't able to achieve. So in order to get where we were today, we had to embark on a significant cost exercise. And you see our costs going up much, much faster than the industry as a whole, which as a CFO, as a treasurer at the time, you'd think, wow, that's not discipline, it's not focus. It was what we had to do. At the same time that our costs have been going up, our margins have been expanding. Proof that at the end of the day, we're investing in things that are driving value to the customers that they're willing to pay for. Things like onboard products, the launch of an economy comfort product where people are willing to pay up $29, $39, $49 in order to sit in a seat that reclines a little bit more with a little bit more legroom, offering something of value to passengers that they're willing to do. Wi-Fi on all of our airplanes system-wide. We're going to satellite-based Wi-Fi so that we'll have internet access anywhere in the globe, even on international flights coming up soon. Personal on-demand entertainment, facilities investments. We just finished a new terminal at JFK. Expanding the network reach, going in and investing in technology to the point that we can have a reservations platform that attracts people to it, rather than trying to punish travel agents and global distribution systems. Try to go the other way and try to get customers value for coming to your lowest cost distribution channel. We've done all of that, and it's led to a significant margin stabilization despite the fact that our costs have run out. The result of all of that is a premium product that is really, candidly, the envy of the industry right now. Now, a lot of folks will tell you that it is because we had a head start. They're right behind us. They're coming in. I think what we're going to find in history is that there was a little bit more of an execution advantage that we had because of the culture of Delta people. Completion factor is up 1.5 points. Doesn't sound like a lot. But that's over 8,000 fewer cancellations in a year. 8,000 flights that historically wouldn't have gone. Now, if you're a business traveler, there's nothing worse than a canceled flight because it happens at the last minute. You don't know how to adjust, puts the system into chaos. That leads to complaints. It leads to potentially even demand contraction. To where if you're, let's say you're a Wall Street banker and you've got a client meeting and you've got a choice, I can do that via the phone or I can do that in person. If you're looking at a system performance where 2% of your flights are going to get canceled, 22% of your flights are going to be late, not on here is you might lose your bags. You know, you put all those cumulative probabilities together, it's something a little north of a coin toss as to whether you're going to be on a flight that has no problems or not. What are you going to do? You're going to do a conference call if you got an important meeting you can't miss the next day. So believe it or not, this type of performance can actually be demand stimulative. People are more willing to take trips in the event that there's more of a belief that you're going to get to a consistent product. That on-time arrival rate, that 5 points of improvement is over 40,000 flights a year more that arrive on time than arrived on time just 4 years ago. It's led to significant improvement in our Net Promoter Score. You guys are, I'm sure, all familiar with Net Promoter. Let's face it, the idea that people love to travel, you know, it's not quite there yet. People don't love to get on an airplane. We put up our domestic scores here because the international scores we're striving to be significantly less negative. Because let's face it, nobody wants to recommend to their friends that they get on any airplane for 9 hours. That's just not something you want to do. So how do we differentiate ourselves? How do we continue to do that? And the result of this is that these awards, this performance, is leading to a much greater concentration of corporate travel. You know, corporate travel managers at the end of the day get paid to consolidate spend in order to try to get discounts. Our global network and our reach has put us in a position where we can go get that corporate travel and do it much more successfully as a result of having these awards. So what does all that mean? How do you put all that together, and how can I make the statement that the industry is in a much healthier position? Look at our operating cash flow, up $1.5 billion. It'll be up even more this year. Our return on invested capital. We're actually getting to the point where we can return our cost of capital. That's the historic complaint against the airline industry, and the source of Warren Buffett's quote is an airline has never earned its cost of capital through a cycle. Airlines basically have always made $1 billion or $2 billion in record profit years, and then in low years they're losing $2, $3, $4 billion. So the cumulative profits are such that they just kind of get wiped out. We're trying to transform that by paying down debt, by focusing on return on invested capital and driving those margins consistently, puts us in a position where we're generating and actually returning cash flow to our shareholders over time. And this is a different approach. In fact, if you look at a lot of the shorter term investors that have been in the stock historically, because airlines have been trading vehicles for a lot of hedge funds, long short funds, they want this product commoditized. They want everybody to spend as little as possible to provide air transportation between point A and point B, and believe that the way to a sustainable industry requires that you just not spend anything. We're taking a different approach. You have to take a balanced view, because if you take care of your employees, they're going to take care of their customers, who are in turn going to take care of the shareholders, who are then in turn going to provide capital to be able to continue the virtuous cycle. One of the things that the industry, and certainly Delta, while I was here, or since I've been here, in the post-2001 era, our employee relations were terrible. We made a lot of executive comp mistakes at that time. The management team that was in place was cutting salaries and benefits while protecting retirement plans. Let me tell you, we sit in an office at the headquarters, we talk about strategies. At the end of the day, if the 80,000 people at Delta aren't going above and beyond their call of duty to try to meet or exceed customers' expectations, anticipate the demands of our high-value customers, none of it matters. So you have to invest in employees, whether it be in technology that helps them do their job better, whether it's in wages, whether it's incentive programs that, we have a first dollar profit sharing program that pays out 10% of first dollar profits to all non-management people. Last year we paid out 6.7% of everybody's salary they got in a check, which we give out on Valentine's Day. It's a nice little treat. We hope to beat that this year as we pay out in Valentine's Day. But as you get that virtuous cycle, what happens is you start to generate momentum. You start to generate momentum behind a culture, behind an identity, behind a brand. And that's where we are today. We're at the point now when I started back in 97, anybody from Atlanta here? Late 90s, you'd always drive down the interstate and you'd see people with little Delta widgets on their license plates or Delta bumper stickers on their car. There was so much corporate pride about working for Delta. They wanted everybody to know about it. Post 9/11, we went through the cultural issues that we had. We went through the restructuring. It all disappeared. Suddenly you didn't want to see the name Delta on the front page of the Atlanta newspaper because it was not going to be a good story. We're getting that back. We're getting that brand cachet back. And it's creating a lot of momentum for our people where this becomes a sustainable model as we look forward. So how do we invest in the product? How do we invest in continuing to grow this on the product and customer side? We've got to expand our global reach. We just announced earlier this summer an acquisition of 49% of Virgin Atlantic. You guys familiar with the Virgin Atlantic brand, Sir Richard Branson. Don't send this to him. Sir Richard, my mom is British, so she'd be doubly offended about that too. Gives us access to London Heathrow. JFK, New York to London Heathrow is the busiest traveled, most heavily traveled market across the Atlantic. More than double the number 2 city pair. And Heathrow is in 8 of the top 10 destinations transatlantic. That's how important Heathrow is. It's an airport that has been, I know I'm not supposed to use this word, monopolized by American Airlines and British Airways with their One World Alliance. Nobody has been able to build up a presence that's quite the level of competition for them. They fly New York to London Heathrow 11 times a day. We flew it 3. So even over the last few years, as we've been able to penetrate the corporate travel market in the most lucrative airline market on the planet in New York, we've had one hand tied behind our backs. This transaction with Virgin, which we just received antitrust immunity, which allows us to coordinate schedules and pricing and make capacity decisions together, which will begin on January 1st, will take us to 9 daily departures between New York and Heathrow. Basically a shuttle type operation that will help improve our product among those travelers there. That will lead to the corporate share gains. For the first time in my career, as recently as 4 years ago, I'd never been involved in a corporate travel decision, despite the fact that I owned the relationship with the investment banking community up in New York. A gentleman joined us from the American sales team and said, we need to focus on two-way relationships. So I started getting involved in those discussions. And where we had less success than we wanted, it was all came down to one reason: lack of JFK to Heathrow access. So now that we have that, what it does is puts a new universe of travelers into our domain that if we can get them on that route, ultimately will build loyalty throughout the entire network. So it's a momentum that builds on itself. Building on customer loyalty, going and now using the new brand cachet that we have to partner with companies like Starwood and have crossover loyalty programs. The Delta American Express relationship is one of the most valuable co-brand arrangements in the world in terms of what we do and the amount of dollars that flow through that. With our brand, we can continue to attract new partners to help focus on those high-value customers. We can't do it without focusing on cost, though, also. And I showed earlier and explained all the reasons why the cost growth that we had over the last several years was acceptable. Now we're in the phase where we've basically fully matured those investments. We've gotten to a point where that operational performance is the norm, and we've leveled out that spend. The next phase on the cost side is for us to get comfortable in our own skin. Scale is not something that an airline has ever had before. There is no roadmap for us to say, what did Airline X do when it was in this position? We've got to go out and innovate. And if you look at our stock price performance, that innovation has been rewarded. We've done some pretty creative things. Some people call them crazy. I'm sure you guys have an idea which one I'm talking about. I got a slide on that too. But overall, by flattening our cost growth and keeping our cost growth below the rate of inflation, we're going to end up having a cost advantage. So while several airlines throughout history have managed to grab a slice of the industry margins by having industry average costs but generating a revenue premium to the industry, or by having a cost advantage and just generating average revenues, we're the first airline that's ever been on the verge of actually capturing both, where we have a cost advantage to the legacy carriers in the industry as they start to pass us with their higher labor rates, et cetera. But we're also generating a revenue premium because of our brand, which has led to the outsized returns that you've seen over the last couple of years. Anybody here that we bought an oil refinery? Anybody by show of hands think that was just absolutely nuts? Go ahead. There you go. Thank you. I'm raising my hand. I think it was nuts. I think it was right, but I think it was nuts. We found ourselves post-consolidation in a unique position. Anybody have an estimate? You guys, not the ones that were at lunch, because I said the number. Of course, if you weren't listening, you can guess too. How much fuel do we consume annually? Is it up there? Don't. There, now I'm taking it off. How many gallons of fuel do you think we consume annually? Throw out a number. 3 billion? It's a big number. 4 billion gallons of jet fuel a year. That's 95 million barrels of jet fuel. If that were oil and if we were a country, we'd be the 48th largest energy oil consuming country on the planet. We consume more oil than Denmark, Chile, countries like that. That's big. And for Delta, we spent over $12 billion last year on jet fuel on a revenue base of about $35 billion. So it's about 35% of our costs. And the airline industry has always said, fuel is not controllable. Can't do anything about fuel. We decided to throw that on its head, mainly because of our scale and because of where refinery valuations were. We believe by taking a position and vertically integrating, which I know is not the mode. In fact, the biggest complaint that, or one of the biggest criticisms or counter arguments to this strategy was it's not a core competency. I actually contend that if you spend 35% of your revenues on one thing, you ought to be pretty smart about it. It ought to be a core competency, because if it's not, all your profitability is as fleeting as market forces that you can't control. We've got to take a different approach. So by acquiring the refinery, what we've done is we have now gotten that refinery to the point where we produce 40% of all the jet fuel produced in the New York Harbor area. Since we've turned this refinery on, jet fuel prices on a relative basis to diesel have dropped by 10 to 15 cents a gallon. Every penny a gallon for Delta is $40 million a year of profitability. And until recently, the industry didn't have the ability to pass that through to customers. We've now gotten to the point where there's some stability, some pricing power because of capacity discipline, where we can actually pass some of that through. But this is an advantage for Delta. Right now, we've lowered the cost of fuel for everybody in the industry. We haven't received any thank you cards yet. I don't expect there to be any, but people are noticing and people are seeing those historical relationships being broken. But we're going to actually almost double the jet production from where we are today and continue to put more and more jet into the market because we are so heavily levered towards jet fuel. If this refinery never makes $1 of profit, but jet fuel prices are 10 to 15 cents a gallon lower, that's $400 to $600 million a year of lower costs for Delta. So there's a strategic part of this that is difficult to grasp, but when you think about the history of the industry, and we spent a little bit of time talking about this at lunch, history of the industry is everybody who's touched this industry has made consistent, stable margins over time. It's the airlines that have suffered. We're now getting to the point where we have the scale to be able to change that equation and change that balance a little bit. So the result of all of this and the transformation, if you will, into what we call a real company was the capital allocation strategy that we laid out in May of this year to our investors. And what we said is, we're going to take the free cash flow of this company and we're going to divide it. We're going to continue to pay down debt. We need to continue to get a balance sheet to the point where we can justify an investment grade rating. I don't know if we'll get there. I've been dealing with rating agencies for 15 years. And believe it or not, it's some of the same people that are rating. And when you go from investment grade in 2001 to Chapter 11 in 2005, that really, really messes with their cumulative default tables. That's what they live by. That's the sanctity of their ratings. When you're dealing with the same people, it's tough to overcome that history. So we're going to deliver the quantitative results that we think we can get there. The rating itself may take a while. But in order to do that, we need to pay down another $3 billion of debt. By the end of this cycle, we'll have taken our annual debt service, our annual interest cost, from $1.3 billion a year down to about $500 million. $800 million a year of extra profitability. $800 million a year of extra earnings that goes into the profit sharing calculation for our employees to help continuing to motivate them. That's the virtuous cycle as we talk about. And we'll get there over the next 3 years. We've got to, as an industry, return capital to shareholders. The reason airline multiples have been so low over time and the valuations haven't been there is when times are good, airlines overinvest, such that when times are bad, they're twice as bad as they otherwise would be as a result of that overinvestment. So if you're a shareholder of an airline, it doesn't matter if you think you're in an up cycle and things are going to continue to progress well, because the historical likelihood of you getting any of that money is near zero because of that cyclicality. If we truly believe in this transformation as we've outlined, we should be convicted enough about it to start a steady flow of capital returning back to the people who that belongs to. We are stewards of the shareholders' capital. We need to act like that. We need to behave like that. And as a result, what we announced in May was the initiation of a dividend, a real dividend, which was the first airline in the U.S. to pay a real dividend. People had penny a share type things, but we allocated about $200 million a year to a dividend, which is 6 cents a share for us, 24 cents annually, and a $500 million buyback authorization to be completed within 3 years. The market has actually embraced that for a couple of reasons. One, it is the firmness of our convictions about the future cash flows of Delta. So I can stand up in front of investors all day long and talk about how different it's going to be. Until we back that up and say we're willing to commit to you that we're going to start distributing this cash because we're so sure that it's coming. We're going to set up this annuity stream called a dividend. They don't have to believe me. But now I've introduced a heightened level of accountability to our shareholders that didn't exist before that. The share buyback, another great opportunity. A lot more flexibility in terms of, you can do the studies. Share buybacks sometimes get completed, sometimes they don't. Sometimes they get completed early, sometimes you take the whole authorization period. But overall, that serves as a great lever for extra free cash flow as it comes out to continue to give incentives to the shareholders and continue to keep that capital flowing. The other part of the allocation is we've got to continue to invest in the business, $2 to $2.5 billion a year. Believe it or not, it takes a lot of money to run a global airline. We are capital intensive. There's no doubt about it. Aircraft are not cheap. Facilities are not cheap. Infrastructure is not cheap. Technology is not cheap. We need to continue that process because if we stop innovating, the industry is going to catch up and the industry is going to pass us. The great truth about the airline industry is if something works, you can bet it's going to get copied. We've evolved to a leadership position in the industry as a result of our merger. I can tell you when I started at Delta, you guys don't get to ask this. These guys are in finance at Delta, and they don't get to ask this question anymore. But believe it or not, one of the questions I had to answer as a financial analyst when I first started at Delta, if it's such a good idea, why hasn't American done it? That was our question. If American hadn't done it, they were the leaders in the industry at that time. It must not be a good idea. It must be something we don't want to do because we're just Delta. Now we're going out buying refineries and people are saying, what is Delta doing? Trying to figure that out. So it's a very different position to be in, but it's one that is predicated on the ability and a cultural willingness to innovate, to do things differently because there are no charted waters for Delta. With an airline this size, with a global reach this big. We're out on our own. We've got to continue to make our own way. Pension funding is the last piece of it. We have an underfunded pension liability that will put us at number one on any list that you look at on a percentage basis. It's a little bit of a badge of pride, though, because rather than terminating the plan in Chapter 11, we were able to work out a legislative solution that allowed us to keep substantially all of the pension plans. And as a result of that, we've got a liability that we've got to fund, and we're continuing to do that. We set aside extra money over and above our $700 million a year of annual contributions. We've set aside another $250 million a year to help advance fund that plan. Put a little bit more money in it, making sure that we're giving back to employees and continuing to commit to that promise that we made on there. So what's the market said about this plan? The top line there, if anybody is colorblind, which my old boss used to be, it was a nightmare making charts for him, as you can imagine. That's Delta's performance over the last year compared to the rest of the airline industry and compared to the S&P 500. And you see that we're up 163%. We're finally starting to unlock some of that value that you've seen avoiding us over time. Just 2 weeks ago, we were put into the S&P 500 for the first time since 2005. Our stock is up probably about 20% since that day. It's attracted a whole new breed of investors that are coming in. Gone are the short term, what happened to what's next month's revenue forecast look like? Next month's revenue forecast is important, but what's fundamentally more important is what's going to happen 5 years from now. How are we positioning ourselves to be successful, to be in a position where we're going to deliver outsized returns? I was in Europe last week, and I got to tell you, if you guys are ever in a finance position where you're doing investor relations, you're going to love talking to European investors. They buy a stock, they're in it for 7 years. I mean, they don't buy quickly. You get a lot of work, but once you get them into the stock, they're in the long haul. One big investor I talked to last week, I had my pitch ready to go about what we were doing, and he stopped. He said, look, He said, we're in your stock. We're at about $23, almost $24 a share maybe today. He said, I know how you're getting to 30. We're comfortable with that. I want to know what's phase 2. How are you getting to 50? How are you getting to 60? I was like, well, if we get to 100, you're going to get to talk to another CFO because I'm going to go teach. But those are the types of questions. Those are the types of questions that never have been asked in the industry before. Nobody's had the wherewithal to ask what's going to happen in 5 years because we were worried about what was going to happen in 5 months. We were worried about what the next hurdle out there was going to be. As a result of this newfound stability and where we're heading as an industry, as an investment vehicle, we're in the position right now where strategic plans mean something. What are we going to do with our 5-year head start over American U.S. Airways if that merger goes through? What are we going to do with the continued distance we put between ourselves and United? How are we going to attract those investors to not only improve the industry as a whole, but to think about it from a Delta perspective and what real companies do? So we've got a lot of success. We've had a lot of victories. We got a lot of work left to do. We understand at the end of the day, you know, this room is filled with potential customers. You guys are the ones that we want to attract. You're important people. You've got busy lives. You need air travel, but you need air travel to be hassle-free. You need a company that's going to take care of you. You need somebody who's got the technology to do it yourself when you want to do it yourself. And that's what we're trying to build. It takes time, but we're much, much different than where we used to be. So with that, we've got some time for any questions that you guys might have. Anything's fair game. I may choose not to answer, but please.
Joshua Simmons. Question. You mentioned that the merger between United and American and how you might, where you might be 5 years from now. How do you think it benefits you? I know a lot of people talk about how it hurts you, but how does it benefit you?
I think you mean U.S. Airways and American, because if that deal can't get approved, I'm pretty sure United and American wouldn't get approved by that. But you know, we're in a position where, like I said, we're charting our own course. And in order to do that, you can't put a business plan together that is predicated on what others are going to do. What others are going to do is going to affect us, there's no doubt. But there are pros and cons if that merger goes through. There are pros and cons to Delta if that merger doesn't go through. For example, if the merger doesn't go through and we're out knocking on doors trying to build corporate relationships, there's only one other large global carrier out there, United, that can compete with. So it's a little bit easier from that perspective. On the other hand, if the merger goes through, it's going to create 4 to 5 years of operational chaos. These things are not easy to put together. You saw what we went through. And 4 to 5 years is an awful long time to build up loyalty with the type of operational performance that we're delivering. So at the end of the day, if you're flying Delta for 4 to 5 years, an American salesperson knocks on the door and says, hey, we're done with our merger, come on back. Where's the incentive to switch? If you've had 4 or 5 years of this type of operational performance and you know that we're investing in technology that when things do go wrong, you're going to know about it. We're going to take care of you quickly. We're going to be able to redirect you. We're going to give you the information you need so that travel isn't as stressful. Where's the incentive to switch back simply because somebody says the merger is done? So we like our chances. The plan we've put together, again, has nothing out there predicated on what others do. It's a conservative business plan in what we believe is going to be a continued slow growth world. And we got to make sure that we're ready to get and manage fuel prices, which we're doing both through hedging and through the refinery and through revenue growth. But that stability we think is there.
Thank you for coming, first off. In the slide about the refinery, you mentioned that you're expected to get to 40,000 barrels per day by 2014. And then in your 10K last year, you said that the maximum capacity for the refinery was 185,000 barrels, which is basically about what you guys use per day. Mm-hmm. Do you still expect that you will get there? And if so, do you have any idea how long it might take?
To get to the 40,000 barrels a day?
185.
We can't, it's chemically impossible to get to 185 of jet. And that's actually what creates a lot of the questions around why we would do this. When you crack a barrel of oil, it's going to crack into basically gasoline, diesel fuel, and jet. And there's some other components through there, and you can vary the balance somewhat. There's a lot of people that don't believe we can get to 50,000 barrels a day on a 185,000 barrel a day plant. We think we can get there. It's going to take a little while to get there, but certainly going from 30 to 40, we actually think will be done by end of March of 2014. The other thing that we were able to do, which makes this possible, is with all the non-jet product, we entered into commercial contracts that allow us to exchange that for jet elsewhere. So we have counterparties where we give product into the New York harbor, and they give us jet fuel wherever we need it. That gives us local purchasing advantages where we can change the status quo, because it inevitably gets, your cost is a function of your next best alternative. So if I'm creating option value around my next best alternative, I can go pick off economics at every station that I buy fuel at where I'm not currently supplied. So there are a lot of hidden benefits to it, but we've got to be able to execute, and we've got a plan to do that.
Thank you for coming.
Thanks for having me.
Delta acquired recently Pinnacle Acquisition. So I would like to know what's the expected financial performance compared to the capacity-based contracts, and is this sort of a mini merger?
Mm-hmm. I don't know if you all heard the question. The question was about our acquisition of Pinnacle Airlines, which was one of our regional carriers, which we purchased out of bankruptcy. The business model for Pinnacle is that by owning that carrier, they will be the lowest cost provider in the regional industry. So as we're looking to allocate our regional feed, despite the fact we're getting out of 50-seaters, we're still going into 76-seat regional aircraft. They're bigger, first-class cabin, premium cabin for people. They still have to be operated by regional carriers. But if you can have a regional carrier in your portfolio that is the lowest cost, it creates an incredible incentive for others to have to compete with your wholly owned subsidiary. They do it on an arm's length basis, but because of their restructuring, we were able to pick that up at a level of economics that is substantially better than any of our other operators. So as those other operators start to come up on their contractual renewals, they're going to end up having to be faced with a decision, or we're faced with a decision of allocating it to this low-cost provider or allocating it to them. They've got to get their acting gear. They've got to be able to deliver the customer satisfaction. You know, we have a new mantra in Delta called same except tube, meaning that you shouldn't, you certainly, if you're flying on a regional carrier and you've bought a Delta ticket, that's Delta that you're attributing your experience to. It's not that regional carrier. We've got to deliver the same operational performance that you saw up here, regardless of who you fly on, because your point of contact is that Delta ticket that you buy. This gives us more control and more ability to help get that to the level that we need to system-wide.
Adam Schmidt, Nissan North America, thank you for being here today. So you talked a lot about valuing your employees and the capital-intensive nature of the airline industry, and I'm wondering through your really lean period and your growth period, what's your philosophy on your delegation of authority, like shopping baskets, spending limits, that you put into a middle management that a lot of us might be in or go into?
Wasn't too long ago that I was there too, so this is all kind of new to me from that perspective. But you know, you have got to empower people throughout the organization, especially in an industry that is as volatile, as many unknowns as we have, as many variables out there. You've got to empower people throughout your organization with various levels in order to meet the customer experience. But you've got to balance that against having a set of rules that puts some governance around it. So what we do is we empower all of our management level people across the business units with the ability to execute agreements as they need to until you get up in size. You know, for instance, anything over $35 million has to go to the board of directors, and it kind of works its way down from there throughout management. But even to those frontline people, you can't have such a rigid set of rules that flight attendant or that ticket agent or that pilot can't go out and do something that they need to in order to react. And I think that's part of the cultural advantage that we have. When you think about how integrations have gone, United has hired all the same consultants, the same bankers, the same lawyers as we had. They're following the same process maps. They're following the same budgets. They're following the same rules that work so well for us. Yet operationally, they're stuck in this cycle that they've been in for the last couple of years and can't seem to work their way out. What's different? Well, the difference is culture. The difference is people. And when you've got a group of people that are empowered and trusted to make decisions at some level, you're going to have a culture that values their input and their feedback. And as much as we like to work on projects and say, the airline can do this more efficiently or can do that more efficiently, the people who really know, the people who really can unlock that type of value are the ones who are doing it every single day. So whether they have an idea that they can bring through their continuous improvement teams, or they see something that they're empowered to do on their own, you've got to have that outlet for them in order to bubble ideas up to the top, especially in an industry where we're scrappers. I mean, we've historically had to scrap for profits, but we know where to go find value, and we know where to go be able to cut costs or be able to do things more efficiently. The difference today is we got to do that process-wise, not do it on the backs of taking things away from customers, and you need your people empowered to do that.
One last question.
Yep.
Next question to Owen, Secretary here. You talked a lot about industry, but as you've done the journey from a business grad to a business executive today, could you share a couple of lessons that you learned along the way, some career advice for us?
This is a long question. Well, I'll start by saying, standing in front of this group, I'm reminded of something one of my assistant pastors said when he was giving a sermon over the summer. He started out by saying, he said, I'm constantly reminded by the world that I'm a lot older than I think I am. And nothing makes me feel that way more than standing in front of you guys, because before today, I thought the class of 1997 was just yesterday. I've been so blessed with my career progression, and I think, in the dean's opening comments, he talked a lot about, I had a single focus. I knew pretty early on what I was passionate about, and as long as this doesn't get back to Delta HR, I will tell you that it has been a long time since I walked into work with the attitude of, I can't believe they pay me to do this. I literally have a blast every day at work. And part of that is the industry. Part of it is because, for some reason, I don't know why, divine inspiration, airlines have been in my blood. And what that translates to, I think, for each of you is follow your passion. Don't be afraid to do it. The money will come, but as the money comes, you'll realize the money is less important than you ever thought it was. And when I started out of Owen, I was ridiculed. I lost a lot of bets with my classmates about who was going to make more money. They don't call me anymore. Make sure you keep your head down. I think I've adopted a philosophy which I share with all the incoming MBAs about putting your career path on two horizons. One is a 10-year horizon and one is a 2-year horizon. And the reason I choose those is because I don't have the ability to look 10 years into the future and even begin to understand what my life might look like. But I have a goal. Like I had a goal. The dean said I had one goal that I had set out. I really had two goals in my life. One was to get a refrigerator with a water and ice dispenser in the door, because I never had one of those growing up. I did that when I was 26 or 27. The other was to be treasurer of Delta. And I thought I laid out an aggressive plan. I said, I'm going to do it by the time I'm 40. I was 33 when I was named treasurer of Delta. And that was a function of, over those years, while I was watching people get promoted around me, watching people getting hired, making more money, is closing my eyes, putting my head down, and just saying, you know what? I realized pretty early on I was one of 5 people at Delta, 2 years out of business school. I was one of 5 people at Delta that knew how to borrow money. And when you work for an airline, knowing how to borrow money is a pretty good skill. So I started to understand I'm building a skill set and I'm building a portfolio here that one day might get me to my dreams. It may not be at Delta. I may be a treasurer somewhere else, but I'm going to be a treasurer because I know the skills that I'm building. And as long as I can keep my head down doing that, everything that's happening out here is just noise. Whether John or Sally or Susie is getting promoted ahead of you, it doesn't matter. And that's what that 2-year vision is like, because I believe people can endure anything for 2 years. I've endured some challenging management situations because I was getting the skill set. The time that I left Delta was because that 2-year equation fell out of bed. I was taking a step backwards. Caused me to take a step back, change careers. 5 months later, I was asked to come back to Delta as treasurer. So keep that balance. Make sure that you stay convicted about what is really your gift and what you're really passionate about, because it doesn't seem like work. And you will spend an awful lot of time in your office. I hope you enjoy it, because the money isn't going to make it better. So thank you all for your time. It's truly humbling to be here.
So on behalf of Owen and the students and faculty here, we're so glad that you've been following your dream. We're rooting for you and the other 8 Owen alum that are there at Delta.
Hopefully more.
Thanks for being here today.
Thank you.
Yeah.
I appreciate that. Thank you all. Thank you all.